Today I want to talk about prepping to purchase a home, or any property for that matter. Whether that property is just land, or an apartment complex, or a new home, or maybe you're on your second home, prepping to purchase that home is always going to be the same. Most of the times you're going to be going to a bank to borrow money and then making payments for the home for up to 30 years. The great thing about cash is you don't have to worry about the interest rate, and usually that is a lot of leverage to winning the offer when you have multiple deals on the property you're looking to acquire. If you're a current owner and you're looking to sell your old property and get a new property, you want to find out how much equity you have in that home, because you can use this equity as either the down payment to your next home, because the average homeowner now, according to some polls, is about $300,000 in equity. And that can go a long way when purchasing a new home, even if that's just for the down payment. Whether those bills are just car payments and the usual electric, gas bill, water bill, those type of things, or you may have debt. Okay, and when it comes to debt, obviously you can have good debt and you can have bad debt. And it all comes down to what your credit says. So your credit number is going to be very important. One of the first things you want to do, though, is start gathering all your data. If you currently own a home, you want to gather up all the paperwork on that, on how much you currently owe, what the payoff amount is, how much equity is involved, what your monthly payment is, what your monthly taxes, well, what your yearly taxes, and any interest or insurance that goes along with that. You want to just compile all that so you have all the numbers ready to give to whoever needs it. And you can also do some math work yourself to find out how much you can afford monthly on your new home. Because I'm sure by the time you've either purchased your first home and you're 10 years in, the amount you could probably afford is probably more than 10 years ago. At least hopefully it is. On top of that, you want to gather your personal data. So if you have any assets that you can liquidate if needed, that means that you can turn them into cash very quick. If you have 401ks, if you have saving accounts, stocks, and all those type of things, you want to know what the numbers are and what their current value is. So this way, at some point, if the lender has any doubts, you can bring those items into play that shows you do have more wealth. These will usually just be looked upon. So for example, let's say you have $500,000 in a 401k. It just shows that you're responsible enough and you do have $500,000 sitting there for future retirement or any emergencies that you may have to use it for. But let's try to stay away from any stocks and savings bonds and 401ks, because we really don't want to touch those. Those are for our retirement, for us to enjoy our life later on in life. And the biggest thing you want to gather up is all your debt. And then what you want to do is figure out what you currently have left over monthly after you've paid your debt and your bills, what is left over, and what you're currently paying for your current mortgage. And then you can decide how much you can afford monthly to move on into the future. Now this number is going to be important, because when you do go talk to a lender, they're going to just give you a big number and say you can afford $800,000 or $1.2 million or whatever they're going to tell you. They're just going to tell you played out, you can afford this. But theirs is based off of mathematical numbers, debt to ratio, and all these type of things. They don't know what your personal life is, so you really want to figure out your own budget and what you can afford and pass that number on to your lender and let them know this is the number that you're looking at for a monthly payment. They can always keep that in mind as they move forward with the loan. Once again, this is vital that you decide how much your monthly payment should be and not go over that, not the lender. When you do go see a lender, one of the biggest things that's going to happen is they're going to pull your credit report to see what your current credit score is. So usually you'll have lenders that will have a base limit of where and when they will give you a loan based on that credit number. Usually it's around 640. There are people that can go a little bit lower, but usually the lower credit you have, the higher interest rate you're going to end up with as well. Another thing you want to pay attention to is all the fees that are going to come with you paying for this loan. This is really important because sometimes these fees can be so much that they actually affect your monthly payment. And if you shop around, you may find people that have less fees and smaller costs, which keep your payment lower. If you do have bad credit, just see your lender about that. Usually they're going to have some kind of credit repair program that's going to give you all the tips you need and kind of specialize in getting your life to a certain level to increase your credit rating. The good part of this is the higher your credit rating comes up, the less it's going to cost you to borrow money. Basically, you'll get the better interest rate. When you are shopping around, make sure that you visit all the lenders within a small time frame. Let's say 2 weeks. I guess you can do it within a month, but if you can keep all your meetings with lenders within the 2 weeks and then decide, because each lender is going to be pulling a credit report, and if that goes outside a certain time frame, it's going to affect your credit rate. At this point, all you're wanting to do is just practice good habits in keeping that credit score as high as possible and trying not to go into any further debt than you currently are. So discipline comes in big time here for the time frame that you have set for you purchasing a new home. With credit cards, you want to try to stay below the 30% of whatever your card maxes out at. So if your card is a $10,000 card, you want to only use about 30% of that. Even better, 25%. So $2,500 on a $10,000 card is okay. But if you're up there at $9,000 on a $10,000 credit card, you've used up 90% of that credit, and it will affect you negatively towards your credit score. If you haven't yet started to save funds for them closing costs and down payment, now's the time to start. Once again, after you know your budget, you're going to know how much you can put away. You can maximize that amount to get to that date of when you want to purchase a home and really get serious about it and keep moving. If you haven't started saving now that you know these numbers, this is when you want to start saving. No matter how much, a little it is or a lot it is, as much as you can afford, you just keep putting it away until you reach your goals in order for you to purchase the home that you want. And of course, a lender can help you out with these numbers as well. It is important that you set yourself a timeline. This way you can meet that goal. Even if you get close to it and you're not kind of ready at the end of that point, let's say you decide 6 months is when I'm going to purchase, and you start saving between those 6 months and you get pretty close, at least you're pretty close, and you just can extend a couple extra months. And who knows what's going on in the market. So for example, right now, if you hadn't started saving, right now is a good time to start saving. Because of the high interest rate, and hopefully in the future, if that interest rate drops, that's when you can pull the trigger and you'll have that savings ready. So that is the majority of the steps it takes to prep in order to buy a home. The last and not least is to get yourself an agent. It makes no sense for you as a buyer to disregard not using an agent. This would be equivalent to you going to court without having a lawyer to represent you. And the best part of that, a buyer's agent usually does not get paid by the buyer. It's the seller that will pay the buyer's agent. So the agent you end up signing an agency with to represent you, he's going to likely get paid from the seller's portion of their commission. So why would you not have an agent? So once again, if you enjoyed this video and it helped you, make sure you subscribe, like, do all those great things. Until next time, keep saving and keep looking forward to that new home.